It's time now for your business update with Stephen Carroll. Hi, Stephen.
Hi, Jeannie.
You are starting with an investigation by the EU into the owner of Cadbury's chocolate.
That's right. This is the company Mondelez, and the EU is looking to see whether or not the company had illegally restricted competition by hindering trade of its products between European countries. Commission Vice President Margrethe Vestager says they'll be looking to see if actions taken by Mondelez led to higher prices for chocolate, biscuits and coffee in the EU. The company owns brands including Toblerone, Oreo and Cadbury. The Commission says it sells tens of billions of euros worth of products in the EU every year.
Stephen, now a big business story we've been talking about all week, the stock market saga involving the retailer GameStop.
And it just keeps rolling on. This story is not going anywhere. It's being billed as a stock market battle between Main Street and Wall Street. Amateur traders have been pouring their money into the video game seller GameStop, despite its poor financial performance. They're hoping to squeeze big hedge funds who'd bet against the company's fortunes. Share price was rocked again on Wednesday when the online forum, where traders have been discussing these moves, went private for a few hours. Catherine Viette has the story.
Wall Street Bets, the stock trading forum on social media site Reddit, is at the heart of a David and Goliath-style battle between day traders and some of Wall Street's largest hedge funds. Traders there have been buying the stock of struggling retailer GameStop, driving up the price and in turn forcing the big hedge funds that bet against the company to pull out their investments in what's known as a short squeeze. They've been able to inflict losses running to billions of dollars on several big Wall Street names. The ongoing market volatility has some analysts concerned.
This activist community decided to bid up the stock and force the shorts to cover. And what you're seeing on a daily basis now is the stock is trading way more than its volume. We're seeing something unprecedented, and it's up because it's a pyramid scheme.
On Wednesday, the forum became a victim of its own success, temporarily restricting access after it became overwhelmed by new posts. The wild trading has caused GameStop shares to rise 1,700% over the past month. But the company, which sells video games on discs, lost $795 million last year as more and more customers moved to online gaming. Many of the Wall Street Bets members have expressed glee at, as they see it, socking it to Wall Street's fat cats. But the forum has drawn the attention of market regulators. The Securities and Exchange Commission says it's monitoring the situation over fears about possible market manipulation.
Stephen, we've been talking a lot about the pandemic. It has been good for some companies, and one of them is Apple.
The iPhone maker saw record earnings for the last 3 months of 2020, topping off a bumper year for the company where sales had been boosted by more people working and studying at home. For the first time in Apple's history, its quarterly revenues topped $100 billion, up by a fifth, and boosted profits too to just under $29 billion. Sales of the iPhone, which is the company's biggest earner, jumped by 17% compared to the same period last year. A big jump too in sales of the iPad, which had been flagging in recent years. And then the things that Apple calls wearables, which include the Apple Watch and AirPods, also up by 30%. Interestingly, though, the company didn't give any guidance on what it's expecting for the first 3 months of this year, citing uncertainty over the pandemic.
And there's also been good results from Apple's main rival, Samsung.
Profits at Samsung Electronics were up by 26% over that last 3-month period of 2020. It was sales of monitors and memory chips that drove the growth in earnings in that company. That wasn't enough to impress investors, though. Samsung shares fell 2% in Seoul today.
Back now here in France, a takeover deal for a major shipyard on the western coast of the Atlantic has fallen through.
A majority stake in the shipyard in Saint-Nazaire was meant to be sold to Italy's Fincantieri. The deal was agreed in 2018 but has now fallen apart, partly because of the coronavirus pandemic's effect on demand for cruise ships. The French state nationalised the business in 2017 after its previous owner went bust.
Despite being extended 5 times, in the end, the deal was not to be. France and Italy have called it quits on a partnership to operate French shipyard Chantier de l'Atlantique. The French government took over as the majority shareholder of the shipyard after its previous owner, South Korea's STX, went bankrupt in 2016. The proposed deal was for Italian firm Fincantieri to take a 51% stake. In a joint statement, both countries acknowledged that the current economic context does not allow the tie-up between the Chantier de l'Atlantique and Fincantieri to be pursued. The coronavirus pandemic has brought the cruise industry to a standstill, but that's not the only reason the deal fell through. There were big hurdles from the start, including a failure to gain EU antitrust approval. And the French government had concerns over Fincantieri's deal to build cruise ships with the China State Shipbuilding Corporation. Officials worried the Italian firm might transfer French technology to a Chinese partner. The French shipyard at Saint-Nazaire is known for making the world's largest cruise ship, but it also makes naval vessels and has been tasked with building a new aircraft carrier to replace France's flagship, Charles de Gaulle. Despite the setback, the shipyard has a full order book, which includes building 10 cruise ships over the next 5 years for MSC and Royal Caribbean Cruise Lines.
Let's check in on today's market trading. European shares started out the day sharply in the red following on from yesterday's sell-off on Wall Street, but things have shifted as the trading day has gone on. Paris's CAC 40 even nudging slightly into positive territory, while the losses have eased in London and in Frankfurt.
Stephen, just to wrap up, now we were talking earlier about the GameStop market frenzy, but that's also benefited several other companies, one that might be accidental.
So GameStop's trading codename, if you will, is GME, but there's another GME out there in the stock markets too. It's a mining company in Australia, and its shares surged by as much as 50% at one point in trading today for no other clear reason apart from its name. The market moves even caught the company's managing director by surprise, Peter Sullivan telling the Sydney Morning Herald that his first thought on seeing this surge was, is there something about my own company that I don't know? Market traders say, though, it's the GameStop frenzy reaching further and further.
I don't think a CEO should ever ask him or herself that question. Stephen, thank you for that. Stephen Carroll with your business update.